Traders, how are you? This is Ben with Vessel Futures Trading. We're back on the market, and today we're gonna talk about what's the pros seen in the graph that you don't. How the pros dealing with the graph, how they deal with a complex situation, how they trade, what they do, what they're trying to implement, what kind of position they're trying to take, and why. And we're gonna do it by covering the NASDAQ contract again. Of course, we're covering the NASDAQ contract because we were talking about it the last couple of months. Couple of weeks, almost 2 months now, completing full moves from supply to demand area and vice versa. So obviously, as a professional trader, you want to see some footprints that big institutional buyers are leaving while they trade. So the average trader will always trying to catch some trades, trying to run after a trade, maybe get into position because he's implementing his belief system, what's the price gonna be, how it's gonna fluctuate. Maybe you got an inside information, maybe you got some market analysis that you perform. But in the right way to trade, of course, there's many right way to trade, but one of the most common one, and one would say a professional trader do, is trying to basically implement a system and trying to locate some footprints that institutional buyers are left in the market in order for him to jump on the trade as an institutional buyer. In reality, me, you, and a million other traders cannot move the market as an institutional buyer. It doesn't matter how many people are trade this trade. We don't have this capacity and the power to determine where the market is going to be and where it's going to move. So a smart and a professional buyer, trader, will trying to predict where the institutional buyer gonna make his move and then try to tag along as an institutional buyer and enjoy the ride. In other ways, trying to ride the success of the institutional buyer, become a part of the decision making and not part of those who lead by the decision. And that can be implemented as obviously, as we talked about many times before in our groups, in our Discord channel. Of course, good morning to my Discord channel. I hope you had a good trade yesterday and this week. And of course, it's always a pleasure to see new traders jumping into the Discord. Of course, new followers on the Instagram and the Facebook and the TikTok, and the Facebook group is really growing in a very organic way, very active. People are sharing, liking, making a comments. I'm really happy with this result. I want to really give a shout out to my communities and all the channels. I highly appreciate you guys tapping along to this daily broadcast and see and share the vision, and try to also copy trade if possible. And those who want to acquire knowledge, that text me and DM me. I'm really happy to see these results, and hopefully as a community we're gonna grow. Of course, those channels are completely free. Those of you who want to extend the knowledge, of course, there's a membership if you wanna do this as well. It's up to your liking. Of course, there's no force and no demand. The demand is only coming from you guys. So if you want to explore more options and know how we trade in more on a higher volume, bigger capacity, and more knowledge, you can tap along to these channels as well. Those of you just starting the market, of course, I highly recommend to check our courses online, and very affordable classes. Also, personal mentorship is available as well. So with that being said, let's dive along and see how the traders, professional traders, look at the graph. So as always, we're looking on the graph on a bird's eye view. We'll always start from top bottom. We're going to look on the higher intervals, because the higher intervals give us a higher validation to our moves. And as we cover in the last couple of weeks, we see basically the price is moving along, accumulating energy in this point and reaching a supply area, when basically we talked about the tariff switch over here. Institutional buyers dropping the market all the way to the demand area, major demand area. And as we said it before, when the price moves from a major supply to a major demand, usually it comes about that you want to complete the full move and getting backwards towards the major area he was back before. From this point, we are basically see supply to demand, and now reaching almost to the reaching a supply in a weekly interval. And in this point, we are going to talk about understanding of the story. Basically, a smart trader or a professional trader, basically what he did, he was tagging along to the decision makers over here in this when the price hits this demand area, or basically over here in the supply area, understanding that an institutional buyer is about to either drop the market down or raising the price upwards, and he enjoyed the labor of his fruits, the fruits of his labor. But joining this decision making, and how do you do this? Of course, you need to learn how to do this. We have to locate some footprints that the institutional buyer will leave at the graph, and we can see over here basically one of them is being implemented over here. We see an institutional buy over here, and we see another institutional buy over here dropping the price. So basically we're looking forward when the price is going to hit this pool, this order block again, in order to short position it. Now, understanding the story means that we understand that basically the buyers in this point right here and here could not raise the price upwards. It means that if they did not succeed to do so, the only other option is the sellers or the institutional buyer would draw the market downwards. And when, as I said before, when we're reaching from a major to a major, always going to complete the full move into the next major area. And now we see basically the buyers are getting into an area, call it an order block. So when the institutional buyer before was determined the market to go downwards, but we see the power and the volume of the buyers is not weakening. Means that the likability of the price to basically make this move right here, reaching this area on the third time. We see 1, 2, and this is the third time that it's gonna touch it. Basically, we understand that the buyers come with a lot of power, and because of the buyers already was in the point that they cannot determine the price is going to go up over here, and huge massive sellers got into the pictures. It means that when you get into the third time with such a volume, there's a high likability that the price basically going to breach this area, make a correction on this pool again, and then continue to climb up. Why is that? Because we have to remember we still in an uptrend. We see over here we're still in an uptrend. There's no new lows is being breaking. It's implemented over here. It means that we're still gonna look for the long position. Now the complexity of this area is playing a part. Why? Because we still have to remember we are still sitting in a weekly supply pool, and if we have only 2 positions to trade, it's basically either to short position it or actually doing absolutely nothing. So if you are not available to trade, if you are only executing 11 commands, you won't be wrong to short position it. But we have to understand over here how the story comes to effect, and understanding that still there is a high volume of buyers that potentially can breach this order block, this supply pool upwards. Let's dive down and look on the daily interval. Within the day interval, we see this area more refined, where we see over here what we see is another pool basically represented in the day interval. Means that we still have this gap to trade as a long position, and we understanding that we still came from a very major area, and the price basically ran over all the minor supplies on the way, now reaching the point where the institutional buyer left his mark before to short position it. So before we enter in a short position, we still have this gap to trade. We still have this red line that we marked as a possible position where the price can basically flip and reverse. So within the day, we can talk about also taking a short position and taking a long position as well. So getting back as a professional trader, we already understand that we understand the story. That's first. Second, we are already located at some footprints of the institutional buyer left before, and when basically he left it, he proved to us when with the price hits this area, institutional buyer already comes very strong in trying to lower the price down. We also understand that basically by doing this, and we can see it in the day interval, we see how many times this institutional buyer basically, how many times the buyers was trying to raise the price up and couldn't do it right here. There's basically 1, 2, 3, 4, 5, 6, 7 times that there was a lack of success by the buyer to raise the price up. Therefore, automatically, if the buyers is not in the picture, the sellers was gonna get their part and play to effect, and we saw how the price was dropping down. So we still have a very, very, very good area to trade, basically at least all the way to this red line or to this refined pool over here. So it's a major opportunity to execute a couple commands. We're gonna refine that now. We're going to refine the graph to seek for opportunity within the day. Within the 4 hours chart, we always mark in the pool area as basically another possible position when the price can be basically hit in reverse within the range of the day that the price can fluctuate. So of course, we have to still keep in mind that all the time that we trade, we're still on the weekly supply. So it's true, we see a volume right here that representing a volume of buyers. We see the price basically accumulating energy from the bottom, which is the major demand that we saw on the daily and the weekly interval. We understand that the price is significantly rising up. We still take under consideration we in our weekly supply, so it's a very tricky area to trade, but we still understand that for the maybe in the day interval it's going to be the 7th time that the price is going to try to breach. There's a high likability with all this volume we accumulated plus the volume and the energy accumulated towards this move. There's a high likability the price is going to breach up, so we're not going to be afraid to take the long position. Now within the day, we're going to refine it. We're going to understand where the opportunity relies, and we already see that there is no surprises. We can also mark over here a supply and the minor supply and minor demands area when we trade, and we understand where the price basically can also flip and reverse along the way upwards. And if we now activate the day profile, which was started to form that before, and we also gonna understand where the price was at the night, we can see over here very clear at the night profile, which represented in the blue mark, and the day profile basically started to form in the yellow, marked as yellow. We see where the price was traded at 70% of the time, accumulating energy in these areas. If you accumulate energy in these areas, usually it's been accumulated energy towards a bigger move. We understand that the bigger move is trying to push upwards, and we see where the price basically closed over here and open above the low value, the high value area of the previous night. Means that we understand we're still in an uptrend. It's going to be easier for us to take a long position, at least from this point to this point, or maybe this point upwards, and maybe potentially all the way to this red line and above it to the pool. So when we're dealing with a complex situation as such, because at the end of the day, the trader is not a really trader, but basically is a risk manager. In order for you to continue to push towards the market, you have to manage your risk properly and accordingly. So we want to take the long position right here from wherever basically we stopped. We're going to talk about the day profile. Looking at the day profile, we can easily trade this position over here. I'm so sorry. Take this position from upwards from here. Just one sec. Right here, we take basically long position from the low value area, which is parallel to this demand pool. May basically created for us at least a gap of a few hundreds. It depends on the contracts that you trade. Either we chose to basically today to trade the micro contract because there's a complexity of being traded in a supply area. So we still, even within supply, we're gonna look for the long position because we understand the story. So we have can create for us a few thousands of dollars if you get in on a high volume of contracts over here. So first position of the day, we can see how the prices started to slowly react to the supply pool that he already met over here. We see the price opening over here, rising up towards the next supply area, which is right here, and respond to it and dropping down. Now we're gonna look for the next possible position. One possible position is that the price is landing backwards, back on the high value on the POC and flip and reverts towards the next supply area, or the high value, a low value area, and then flip and reverts upwards towards the next supplies areas and react accordingly. So this is two possible position of the day. Of course, within our group, we're going to cover more of this. We're going to discuss and have a discussion about how do we trade these areas and how do we continue along the day to trade with this position. I want to wish you all successful trading. Of course, as always, I'm going to see you on the next market overview. I hope you like this content in this channel. If you do, please like and subscribe and join our Discord channel, which is a completely free education. I'm wishing you happy trading, and I'll see you in the next market overview. Thank you.